The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time. We got about 30 minutes to go until the start of trading. Quite the historic day of trading yesterday. We'll get into it a little bit more, but as we all know, the markets charged higher, charged lower, and finished the day in positive territory across the board yesterday. This morning, though, we have markets yet again deep in the red. We got the S&Ps negative 1.5%. For some context here, in terms of where we are negative by 1.5% right now. In any other world, if you check out this chart, well off the lows. You're talking about 126 S&P points still off of the lows this morning of yesterday as we come into the opening bell, negative 1.5%. NASDAQ, 2% negative on the dot right now, still about 500 points from where we were trading at yesterday. You actually made a high right into the close yesterday. You're talking about a high of 14,522. So we've given up about 300 points in the NASDAQ 100. You're negative 289 to be exact. The Dow was down 1,100 points at one point yesterday, 33,031. We almost got a 32,000 print in the Dow, 31 points away from that price level. Just like that, we're right back near 34,000, just under that number at 33,991. You jump to commodities, currencies, Bitcoin saving itself with the market. A lot of talk yesterday about the one thing that could save Bitcoin and crypto, Bitcoin in particular, is the correlation that it now has with the market. Bitcoin can't go to zero if it's correlated with the market. Not sure I believe that one quite yet. It may be correlated, but that doesn't mean it can't go to zero, and that doesn't mean it can't become uncorrelated at some point. Bitcoin this morning, negative as well, down about 1.6%. You see the action, though. Bitcoin, pretty correlated yesterday, pretty correlated this morning as well. Ethereum, down about 1%, made it to 21.58 yesterday. Gold contract up to 18.42. You got gold flat this morning. Gold traded below 18.30 briefly on that acceleration to lower prices yesterday before settling at about 18.42. We jumped to silver. Silver basically flat at 23.73 this morning, and notes and bonds. We got a little bit of lower price on the session, but you see the drop and then the rise. You're talking about almost 10 ticks above where we were trading at just at about 6 a.m. this morning. You're talking about a yield right now 1.75%. 1.75%, the yield on the 10-year. And we jump over to the volatility index. Quite the rise and fall. We're right back to basically where we started yesterday. We're going to do it all again? We're going to find out in about 21 minutes when this market starts trading on the opening bell. You get the VIX right now trading at 33, almost made it to 39 yesterday. For some context here on the VIX, put out an update to my subscribers yesterday at about 11:30 in the morning. And at that point, yeah, we had already, I think, peaked out at 37.95, somewhere between 11:30 and 12. Let's put this on a 15-minute and see the action yesterday to see when that spike actually was. So there's your 37.95 spike at 10:15. Yes, and the update was out somewhere around here. So I had a spike of about 38 on the VIX. Now, it's interesting. Yeah, 38.94 is the high. I had 37.95. Written on this chart to illustrate. Okay, we're going to take that off. No longer the high. We actually got above that. Point being, I'm going to back this out for a 3-year weekly and then zoom in on just the spikes of the VIX outside of the 85 spike that we got when the pandemic began. And as you can see, this spike up here is 38.94. All things considered, that's pretty relatively high that many times prior, you're talking about have not been at that level since October. Correct? What do we got here? Going back, 38.57. Yep, we got above there. October of the year 2000. Last time we saw VIX spike that high, folks. In all of 2021, with the volatility we had, a lot of upside volatility, but we had plenty of VIX spikes here as well. When you start looking for a market turnaround, folks, you get the VIX spiking to almost 40. That's an area that you can start looking for one. Now, we got to 80 plus during the pandemic collapse, but nonetheless, we turned around. We might get it again today. We'll see where we go from there. All right, I'm going to jump over to kick off the show. An article from Bloomberg. My dad sent this to me last night on the Bloomberg terminal, and let's get up to the headline first. NASDAQ days like this once were common. Block your ears, folks. You're not going to want to hear this one. Maybe you are. During the dot-com crash. The index hasn't wiped out a loss of almost 5% since early 2001. And that's what we did yesterday, folks. You had the NASDAQ 100. Along with the rest of the markets, turning on a dime. They were down almost 5%. They finished in the positive. There is the official statistic from yesterday, negative 4.94%. We almost got to 5. Talk about turning around at one of those round numbers, our man Basil Chapman. And we close 0.49% in the positive. Now, Bloomberg assembled all the times that we've come close to there, okay? The table below shows the past instances where the NASDAQ 100 erased an intraday decline of bigger than 4%. I'm going to blow this up even a little bit to see it, okay? I want to get the full context in here. All right, I got to zip back it down a little bit. Okay. So here is yesterday. Last time it happened, folks, above 4%, you're talking about 2008. You're talking about 2001. Now, what was interesting here is you go down the list. Last time they say it eclipsed almost 5%, okay, when it was right up against that level. They're talking about 4.87 maybe. 4.84 got in the positive. Look at how far it got in the positive early in 2000. You were negative 4%, negative 4.8. You finished positive 3.8% August 3rd. You finished positive almost 2% on October 26th. You finished positive by more than 2% on October, that's later in July of 2002, and then check out the action on October 16th of 2008. That's about a 10% swing, folks, from going negative 4% to positive 5.5. Now, here's the real interesting part I want to get to. Let's take a look at what it looked like in the year 2000 when this stuff started happening, all right? The first day they have up here is August of the year 2000. I'm taking a look at the S&P for some context here because we all want to know what happens. What is this a sign of? Doesn't seem like it's a sign of great things for the market when you have this type of volatility that you're unsure of. I'm going to zoom in on the years of 2000 here, okay? Now, we're talking about August 3rd of 2000, okay? You back it up. Here's the year 2000, folks. If you see where we are, you were at highs in the year 2000 from March till September. What day was that? What month was that? August. It happened a month before. The biggest one of all, folks. You went from minus 4.2% to positive 3.8% in August of 2000, directly preceding a collapse from about 1,500 to 750, almost a 50% pullback. Now, the next one that occurred was October. Okay, October, there is your October. That's your rebound, folks. You can see the tail on that chart there. That is a monthly chart, but boy, the daily chart was a lot of it too. Now, I have the S&P up here, okay? I have the S&P up here, but it's going to illustrate the type of moves you got. It's going to give you an indication, all right? Because I don't even think the NASDAQ, does the NASDAQ go back that far? Yeah, they do. Let's zoom in on the NASDAQ for the exact deal here. Back to it again. There is August, your bar as well. There is October, not quite the same tail, but you see the point, all right? These started happening at the beginning of the collapse. You thought it was bad, folks. People thought they got saved in August when you finished 3.8%. How about in October? Minus 4.8, you finished the day up almost 2% in October. That is October, folks. That is October, and the NASDAQ 100 at 3,500. Fast forward a year, and you're at about 1,000. So we'll finish up a little bit more. We're going to talk to our man Kevin Hincks when we come back. But we got 8 of these in the span of 2 years, from 2000 to 2002. And the first one kicked off the pullback. Keep that in mind. Stay tuned, folks. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the markets in negative territory. S&P's negative by 64 points right now. I've got a chart up here of the NASDAQ 100. So NASDAQ 100, you're negative by 289 points right now. You're negative by 2%. Taking a look at that list again, just real quick. I have this zoomed in on the year 2000 and the year 2001, because pretty cool when you take a look at these statistics, folks. You had 2 in the year 2000 that we turned it around from greater 4% in the NASDAQ. We got 3 in the year 2001 and 3 in the year 2002. Then you got 3 in the year 2008. Not exactly years that the acceleration continues there in a big way in terms of pullbacks, is what I'm talking about, folks. I got the NASDAQ 100 up here. The first day that happened was in August. The second day it happened was in October. You're basically sitting at highs on those indices. You were at between 3,500 and 4,000 when it started happening. You got 3 of those days in the year 2001. You got 3 of them in the year 2002. The final one in 2002 taking place in July. Okay? Now, July, the only thing I can tell you there is that, yeah, by July, you had reached 897. Still we're good, almost 10% off the lows of 809 in October. But boy, man, hopefully we don't have 2.5 years of a pullback like that, but something to keep in mind. Quite the acceleration. And man, when you look at that list, the volatility that we may be in store for, folks, just keep those spikes up on your back, because today, yesterday, we got some volatility in spades. Let's jump over to our man, Kevin Hincks, every trading day at 12 noon Eastern time, folks. Fast Market, Kevin Hincks, Tom White, the team at TD Ameritrade Network, breaking down the day's market action, talking about hypothetical trades, adding a little bit of defined risk, which might be an attractive aspect of trading after yesterday and today. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. You know, I think we should start this discussion with a quote from Warren Buffett, Tommy, and that is, be fearful when others are greedy and be greedy when others are fearful. Tommy, yesterday with a VIX that hit almost the 39 level and the massive volumes that traded yesterday down at those levels, I think we saw exactly that when it looks like when it came to this market, Tommy.
You make a great point with the VIX, Kevin. I was talking about it even a little yesterday. I got a chart up here on a weekly basis of the VIX on the Thinkorswim platform. Outside of the collapse of the markets in the beginning of the pandemic in March when it hit 85 and change, we were right up there, Kevin. Last time we saw it up at this level, you're talking about October of 2020. We didn't even see a VIX this high in all of 2021. And yeah, it was quite a banner year, but we also had some pullbacks in there with the VIX above 30 at least 3 times that I see on the chart. So pretty cool when you take a look at that VIX. I was looking at that as well, and what do we get? Didn't imagine maybe that would get from 5% to positive across the board, Kevin, but quite a day yesterday. What do you look at for today, man? Of course, even my friends and I, you know, you can't help but say, are we going to do it again? Here we go again. What are you looking for today?
Well, I don't think this open is near as scary as yesterday's was, and I think with everything that's on the horizon, Microsoft earnings, Boeing's earnings, a Fed announcement and press conference tomorrow, I think the script may have been flipped, Tommy, from higher openings and ugly closes the last week or so to yesterday was an ugly open and a pretty good, strong close. So I think what's happening is you may see a script flip here, Tommy, and so you've really got to watch how this market opens and if buyers come in and how quickly they come in, frankly.
Yeah, Microsoft, pretty amazing day Microsoft had yesterday. I mean, almost amazing statistics no matter what stock you pull up, especially if you're talking growth stocks, man. But Microsoft, pre-market, you were at $297.50, trade down $20, man, and you get it all back by the end of the day. Today we're trading at $292 right now. You're down about $4. I just jumped over to the Analyze tab, Kevin. As of the close yesterday, you're looking at about a $17 move for their earnings. Pretty interesting when yesterday alone we got $20 in both directions, man. But I don't imagine, like you say, maybe those days few and far between. With the Fed coming up, Kevin, you stated there's like so much on the menu this week in terms of earnings really accelerating. We had a lot of stocks coming out, Microsoft today. But what is your focus in terms of where you're looking with so many marbles in the air in terms of Fed starts their meeting today, they're out tomorrow. Are you looking for that March, guidance? Where are you kind of focusing, I guess it would say, on your trading and what you're looking for in the market right now?
I believe tomorrow will reveal in Jay Powell's press conference a big difference between his rhetoric when he's trying to get confirmation and his rhetoric post-confirmation as Fed chair. I think Jerome Powell will say things like lower interest rates for longer. I think he will differentiate between tapering and raising interest rates. And I think he will be more dovish, less hawkish. And Jerome Powell, if anything, has become proficient at saying things that the markets like. He's become extremely good at it. And I expect him to do that tomorrow as well, Tommy.
Man, I'm gonna be trying to watch that press conference because pretty interesting action, to put it lightly, coming into Chairman Powell's press conference. Man, when you get a day like that, he's gonna have some questions, I'm sure, in terms of market volatility, a little bit of a tantrum in the markets. They got it all back, and he'll be talking tomorrow. With everything going on, Kevin, what are you guys talking about on Fast Market coming up today at noon?
Well, today's show will focus on the two big names coming out with earnings after the bell today and tomorrow morning. Like Foley will do a presentation on Microsoft. We'll trade Boeing, and we'll trade a stock now, NOW, that we'll look at today in the opening segment. So two behemoth, high-profile names, and then one that might be a little new to some people.
Yeah, that one's new to me. I will check it out. Microsoft and Boeing, not so new to most of us, at least, to put it lightly, and kind of cool how those are quite a difference, man. You got the King Titan growth stocks out there with the FANG stocks of Microsoft, and then I can't help but constantly be looking at some of those travel stocks, Kevin, for a pop. You've talked about it before. Maybe you go to Boeing versus one of the airlines to gain some exposure. Boeing really struggling, man. Remarkable that you're still at about $200. You're at 200 almost to the penny right now with a bid ask on Boeing shares. Boy, quite a ride for them as they struggle to get out of the funk that they've been in really since the pandemic or even before with the 737 MAX. Kevin, we appreciate the update as always, man. We will be watching today. Exciting day as always, man, and you have a great one as always.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure, man. Folks, tune in every trading day. Boy, especially when we got everything we got going on this week. We got volatility in spades, folks. We got earnings. We got a Fed decision. They're going to be checking about Microsoft, Boeing, and Now at their program at noon. And yeah, I mean, this is, folks, if you're looking for areas, there will be, in my opinion, a rotation to the travel stocks eventually. Doesn't mean that some of them might not go BK before the market gets there, okay? To put things in context, don't imagine that's going to happen with Boeing. You check out where we are in Boeing. You have quite a collapse in the pandemic, of course. I was looking for a channel line on Boeing back here. You held that channel line well until about August of last year. And since then, we've just been chopping around for the better part of, you're talking about 6 months, basically, with 200, though, being an area of somewhat support there for Boeing. You did make it down to 185 towards the end of 2021. So weekly chart I have up here. Boeing's got some work to do, but you jump over to the Analyze tab on the Thinkorswim platform. You jump down to the fundamentals. You're talking about a company right now. Come on, load for me. We'll pull up the market cap. I want to be exact on this one. There we go. $117 billion. Yeah, I was going to say 120. $117 billion. Not that bad when you think about Boeing ain't going anywhere, folks. We need a company that makes planes. Only 2 of them in the world, and Airbus. We're not going to let them be the only one. Stay tuned, folks. We'll be right back.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open right now, and we have markets accelerating a little bit to lower prices. You're talking about an S&P now off 1.6%. Oh, That's not the action, excuse me. Let me zoom in on a 5-minute chart. The S&P, come on, cooperate. Yes, it is. Trading at 43.32. See a little bit of a drop off. You know, what's going on in this chart? I couldn't even see the action this morning. Of course you can't see the action, folks, because the S&P yesterday did about 200 points of action from lows to highs. You got to zoom in directly on the low action this morning to see the volatility and put it in the context of actual points, because 200 points of yesterday's action, just not going to see the movements today, at least in the small ones. NASDAQ 100, you're negative 1.9%. The Dow's off 1% even, and the Russell is off 1.6% right now. We got crude popping a little higher. We got crude up 28 cents at 83.59. The gold contract is flat at 18.40 this morning. We jumped to notes and bonds. Technically a little bit of lower price, but we are higher from where we were earlier in the session. You're talking about a yield right now, 1.75%. All right, let's jump around to some of the stocks that already are out with their numbers this morning. We have American Express. Uh-oh, watch out, folks. Not the open that American Express investors would have wanted. Up 1%. Up less than 1% now at 160. You see the volatility on their numbers. You see the conference call. Getting into American Express numbers in terms of, come on, cooperate with me. There we go. Now, what's interesting here is record card spending helped American Express report better than expected profit and revenue for the fourth quarter. Earnings came in at $2.18 a share, well above $1.87. I think there was a little bit of a miss of guidance there or something going on. American Express sells off some context on this stock. You put it on a 3-year weekly. As you see, just kind of chopping around at where we've been since about May, makes it up to 189. You got a trading range in American Express between about 160 and 180 since May of last year. We also have GE out with their numbers. GE down 6%. There's some volatility for you on their numbers at 6 in the morning. You trade back to about 94. You start the conference call at 8 in the morning, and we're down about 6% on GE. GE, I think I have an article up here. Do I for GE? Where are we at? I thought I did. Quarterly earnings, 92 cents a share. Market was looking for 85. Forecast improved cash flow for 2022. I mean, you see what's going on. There's some tough expectations across the board right now. GE down about 6.6% on their numbers. IBM, we got to get into IBM. Now, where are we here? Here we go. Now, IBM, I think we're back lower already. Let's see how we're trading. We're still up 1.4%, but man, they really accelerated higher last night. You gave it up when the conference call began. So they report revenue growth in the fourth quarter. Let's get down to the numbers here. $3.35 a share versus $3.30. Quite a beat on revenue. Yeah, $16.7 billion versus $15.96 billion. They spun out is managed infrastructure services business. Revenue rose 6% from a year earlier. IBM executives have been telling investors of late to look for mid-single-digit revenue growth in the prior quarter. IBM's revenue from continuing operations increased by 2%, so they're up to 6% from 2%. Net income jumped 72%. The CEO reiterated the mid-single-digit growth goal on a conference call with analysts and said to expect between 10 to 10.5 billion in free cash flow for 2022. Not bad when you talk about free cash flow of those types of numbers. Revenue in the consulting unit, previously named Global Business Services, rose 13%. Decent numbers across the board, and IBM's only up about 1% right now. Not bad when you consider that the S&Ps are down 1.5% with all of that going on. All right, we talked about IBM. We talked about GE and American Express. Johnson & Johnson, they're out with their numbers, $2.13 a share. I saw something. They're going to take in like $3 billion of vaccines alone next year, they imagine, or this current year. Johnson & Johnson, about flat. 162.60, down 37 cents. Not bad with the way the market's trading right now. You spike to 156.90 on their numbers before jumping higher for Johnson & Johnson. Jumping down the line, we have Logitech trading a little bit lower. We'll see how they opened. Tough comparisons to elevated pandemic-induced demand a year ago. Logitech raised its sales forecast. Company, man, they really have gotten it done. Now, you take a look at the longer term, quite the pullback, all right, for sure. But look where they were pre-pandemic levels, from 45, you're opening right. Yeah, you have been cut in half from where you were. Talk about getting ahead of itself up to June. Did not realize it was that type of a pullback. I mean, the pullbacks in some of these companies, folks, I mean, we all talked about it coming into this year, right? I mean, you had in the NASDAQ something like, 30 or 40% of equities were down 50% from their highs. There's a look at one of them that's pretty close. You take a Fibonacci run from the lows of COVID to the highs, you're right back to the 618 and you pop. The 382 and the 618 on Fibonacci, folks, I just love to keep my eye on those. You know, they don't work all the time, but at least they give you an idea of an area that you can base a trading plan around if that's what you trade with. You're right. You're right. You're wrong. You set your stop on the other side and you get out. You gift back the entire 618 from 140 to 78 to not all of that from 140 to 71.11, almost an exact 50% haircut from the full price, a 61.8% retracement from the run it had in March of 2020. And just like that, we're up 5.3% for Logitech this morning as they increase their forecast in the future. All right, what else we got going on? Let's see. We got interest rates. We got the Fed starting tomorrow. Yeah, this was a tough one. So retail traders bailed on the market right before stocks rebounded. There have been some really interesting charts coming out recently in terms of retail, the performance of retail. Retail crushed it early on in the pandemic, but since about like February, March, April, May of last year, they've been pummeled. One of the reasons why, you saw it on the stocks like Logitech. You see it on the stocks like Zoom, right? Pretty similar action, if not much more accentuated on charts like Zoom, charts like Roku from 490 to 156, even charts like Tesla from 1243 to 923. I mean, look at Tesla. In a market that went up so much, Tesla actually flat from January of last year. Compare that to the S&P. Okay, you still have the S&P trading at 4,300. In January, you're trading at 3,800. You're talking about a good 14% higher from where you were in January. Tesla flat. You can see how that underperformance has come in. Now, yesterday, you had some serious retail selling. This is cumulative retail order imbalance for January 4th, 2002. It was just ratcheting up coming into 11:30 or noon. The retail morning exodus was a stark about-face from recent sessions when diehard traders snapped up a record $12 billion in equities during the 2 weeks through last Tuesday. Got to pay attention to all of this, folks, okay? Well, the rush for the exits helped drive the NASDAQ 100 down almost 5% Monday morning. It's possible the news wasn't entirely bad for bulls on the lookout for signs of seller exhaustion. Maybe you finally got the retail traders selling that were thinking about selling. This morning's action wouldn't indicate that the selling's over because you're down more than 1.2% right now across the board. But something to consider. Excuse me. Now, in the short term, it's a good indicator that retailers, investors are capitulating, which is leading to perhaps a temporary bottom. But with that, buyer beware. There's a convergence of material risks from a more restrictive Federal Reserve to a fiscal drag to geopolitical concerns, all of which can dampen market sentiments even further. Yeah, well, we'll leave that where that is for right now. Yeah, there's a lot of, this is a good one. We're going to talk about a couple more when we come back. We got Goldman talking about a higher risk of growth stocks. We also have the IMF coming out this morning, and they are cutting the global growth forecast as the U.S. and China recovery wanes. We'll talk a little bit about that, 4.4%. Not bad, but not what they thought. Stay tuned, folks. We got the S&P's negative by 62. Be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the markets pulling back a little bit more. We got the S&P's negative by 72 points right now. NASDAQ negative 264. Dow off more than 400 points. I got a chart of CVX here. Chevron up here on a monthly basis, going back to the year 2005. Real quick on a 15-minute basis, you have Chevron trading down about 0.5% today. Traded at 122.84 yesterday. Got it all back. We're right around where we were at the close of action on Friday. Now, again, going back all the way. Question in the YouTube Tigers Den talking about CVX as a low volume high from 2014. I think they're talking about this 135.10 from 2014. You're $9 away from that price level. Huge consolidation thoughts. So the only thing I'll say on this is, number one, quite the acceleration indeed. From November of last year, you're at $70. Yeah, $69.40. Even from October, $65. So you're talking about basically a double bagger, a 100% return from where we were in October. Now, again, you back this up. We've never traded much above these levels for that long. Even you back it up to 2014, you were briefly above to 135.10. You chopped around at the 120 to 130 level for the better part of 2 years from 2018 and 2019. Now, here's what I'll say. Even when you had crude at 140, at 100, you never had Chevron above these price levels. That's a little bit worrisome when you see some of these stocks that can't quite accelerate higher. Doesn't mean it's not going to happen right now, okay? But you take a look at crude. So remember, that high is from July of 2014, okay? You take a look at crude, and we'll zoom in on the action. In July of 2014, we had crude trading at 104. We had crude trading at above 100 for the better part of 1, 2, 3, almost 4 years. You had crude trading at over $100 a barrel, or that or thereabouts, I should say. Trading above where you're trading at right now, right? And during that whole time, yeah, you ramped it up. But at the end of that run, at the end of that 4 years, you peaked at 134. You had crude above $100 for 4 years, and you had Chevron barely get to 135 before it sold off. You've now come back up to that level, and we only have crude trading at $83. Yeah, we're 8 years into the future. There's inflation. There's all of that. But I would be worried anytime you're bumping up against this level. We got 2 years of resistance here from 2018 and 2019. You're bumping up against another 2 years here from 2013 and 2014. Might look for some type of a pullback here as opposed to getting in for Chevron reaching those highs. All right, let's jump back to the markets. Got things escalating a little bit. It's continuing. And again, you put it in the context of yesterday's chart, you almost can't even see the pullback, folks. You put it just in this morning's action, though, and you're talking about from where we were at 935, you've just dropped 30 S&P points. We got some volatility, man, big time. S&P's off 83 points. We got the NASDAQ 100 off 2.25%, 14,175 right now. Let's jump around to some of the FANG stocks. Microsoft with their numbers tonight, $291. You're down 1.7%. Microsoft pricing in about an $18 move for earnings event. Now, that's for the event itself tonight. Okay, if you take a look in terms of if you want exposure through Friday, which is really what you'd be buying if you're buying the options. You're paying for the exposure through tonight, but you don't have daily options, so you'd be buying the weekly options. Maybe you unload them tomorrow so you can still get an idea of how much volatility is going to be priced in come tomorrow, right? If you hold this through earnings, realistically, theoretically, $18 of volatility premium should be sucked out of this. There'll be about $3 of volatility premium left for the last couple trading days, for Wednesday, Thursday, and Friday. But you're talking about a $21 move in either direction from Microsoft. Doesn't seem that bad when you're getting $6 moves, $20 moves here and there. We're going to see, but Microsoft will be out with their numbers. I believe it's after the bell tonight, right? Analyze, earnings tab. Yes, after the bell tonight, Microsoft out with their numbers, trading this morning down about 1.7% so far. How about NVIDIA yesterday? Man, we got some huge moves in these growth stocks. NVIDIA almost traded below 200. Folks, we were trading at 346 as recently as November 22nd. That's 2 months ago. It's only January 25th. 2 months ago, you were trading at 346, and we just almost hit a 100 handle in NVIDIA shares. You got the S&P down 90 now. This is going to be a wild day, folks. We got the VIX right now trading 33.92, putting the VIX back on a 15-minute. We were just at 32. VIX just jumped 2 points pretty quickly there on the volatility index. All right, jumping back to, talked about the IMF. So this news out this morning. Global growth does matter, folks. Many firms do business globally. International Monetary Fund downgraded 2022 global growth forecast 4.4% now. IMF said expects GDP product to grow 0.5 percentage points less than the previous estimate, must have been 4.9. The revised outlook is largely due to growth markdowns in the world's two largest economies, the U.S. and China. Not what you want to see. I mean, there's quite a little storm brewing right now with everything going on. Talking about inflation, right? We had retail sales was a big miss in December. We're going to get those in January soon. There's going to be a lot of expectations on retail sales in January, considering the miss we had in December. Everyone was saying, what happened? Did sales get pulled forward to November potentially for the holidays because of the worries of supply chain issues, et cetera? We're going to find out. The U.S. is expected to grow at 4% in 2022, 1.2 percentage points lower than the previous forecast. That's quite a pullback, folks. 1.2 percentage points lower than the forecast. I mean, it's a big number, as we know. The updated outlook also removed President Biden's signature Build Back Better fiscal policy package from its baseline projections. That would have added GDP as the consensus as well. China, meanwhile, predicted to grow 4.8% this year. That's down 0.8 percentage points from the earlier estimate. So you got the U.S. was previously at 5.2%. The IMF's now putting them at 4%. China was previously at 5.6%. The the IMF's putting them at 4.8%. Inflation is in focus. The IMF said higher inflation is set to persist for longer than previously anticipated. They're not the only ones saying that. Looking ahead, the report upgraded its 2023 growth forecast by 0.2 percentage points to 3.8. However, it warned that the estimate precluded the emergence of a new COVID variant. Yeah, there's a lot up in the air is all they're saying. So basically, they're pushing back some of their growth, right? They take it away in 2022. They give it back slightly in 2023. And we'll see how that plays out. But nonetheless, and China's going to be an interesting one here because China supplies the world with a lot of what they use, folks. And the whole zero COVID policy, could come back to bite them in a big way. And that could come back to bite the world in a big way, considering the supply chain, how integral they are to the supply chain. As I get the chart here, the S&P up, escalating to downward prices, down 100 points as we speak. NASDAQ 100 down 392 right now. Dow off more than 600. The Russell off 2.6%. Man, that is a tough one in terms of the volatility. And they were just talking about the Tigers Den, folks. Who said it here? Somebody talking about margins got raised. TD Ameritrade, Ruby's out there saying the RTY, the Russell margin requirement, getting raised. Yeah, and that's Dudette is in there saying yesterday some people must have blown their accounts. Yeah, the market does not normally request enough margin, folks, to have 5% moves in indices. And yesterday you had the Russell charge from 2,000 to start the day and almost made it down a full 4%. Yeah, 1925, let alone where you were in the NASDAQ, but you're going to see it. We start seeing moves like this. We start seeing 4% down, 5% up. You're going to see margin requirements go up naturally. S&P's down 2.1% right now. NASDAQ down 2.6% right now. Dow off 1.7. Could call the Dow the leader, down 1.7%, and the Russell down 2.5%. We got gold up $10. We'll take a look at gold when we get back. Stay tuned, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So much for saving itself yesterday. We are back in the doldrums. We got the S&Ps down 2.5% right now. NASDAQ 2.9% right now. Dow 2% and the Russell 3.14%. It's going to be a wild day in the markets. You got Bitcoin down about $900 at 36,000 right now. We got crude in positive territory, up 67 cents at 83.98 right now. Gold catching a bid. There's an acceleration on gold, up to 18.52. Gold, one of the highlights here. And we jump to notes and bonds right now, continuing to rise higher. You're talking about higher price and lower yield on that gold on the 10-year, and we're talking about 1.737 right now, the yield on the 10-year. Let's see how the VIX is handling this sell-off in the market. We're back to almost 35 in the VIX at 34.88. I mean, the S&Ps, folks, you know, compared to yesterday, it doesn't look that bad. But if you just put this on a minute chart for a moment, and you back it up to where we were just even as of 5 o'clock in the morning, You're talking about 90 S&P points, 90, and you back it up to just where we were as of 9:37, less than 20 minutes ago, folks. The S&Ps just gave up 60 points in the span of about 20 minutes. It's going to be a wild day in both directions, I imagine. I imagine we'll get a bounce. We'll see if the bounce holds. Quite an interesting day as we get a Fed meeting starting. You think they're going to have anything to talk about in that room as that meeting begins today and they think about what they're going to say tomorrow as the market is throwing fits we have not seen in 14 years, folks? I'm going to jump back to it. If you didn't see the beginning of the program, all right, I talked about, folks, Bloomberg had a great article over here talking about NASDAQ. Days like this once were common during the dot-com crash. Hasn't wiped out a loss of almost 5% since early of 2001, and folks, you back it up. Okay, last time it happened even close in terms of greater than 4%, you're talking about 2008, and quite a turnaround to finish the day up 6.4% after being down 4.7%. But you back it up. The beginning of this acceleration, folks, August of 2000, October of 2000, that was the beginning of the NASDAQ sell-off, and we ended up having 8 of those days over the period of 2 years, going from August of 2000 to July of 2002, you had 8 days that you erased a 4% loss in the markets. We got the first one yesterday. We'll see if it's the last one. We're down 2.5% today in the S&Ps, and we're down 2.7% today. We might get a chance to do it again today in the NASDAQ. We'll see. Stay tuned, folks. Basil's up next. We got our man Larry at 11, Fast Market at 12, Steve at 1, Dave at 2, and Tom O'Brien, my dad, live from 3 to 4. Have a great Tuesday, everybody.